Living it up in the city. Got Chuck's on with Saint Laurent.
Morning, everyone. Good afternoon, good evening, wherever you might happen to be in the world. And we're going to talk about what stock to trade now with me, Gordon Scott, CMT, and with you. And the stock to trade is SBEV, SBEV. Okay, just a quick sound check and video check. Could you text to see whether, would you text in and let me know whether or not you can hear my voice and hopefully see my screen here that I'm sharing. You can text that in or if you're there, you can just let me know. All right, I'm just going to assume that we are good to go. All right. Excellent, thank you. We're good to go. So this stock, Splash Beverage Group, if there is a stock to trade in the next little while, this is it. And I'm going to spend a little bit of time explaining why and how to go about trading it. So that seems a little, well, anyway. Let me tell you the story behind this stock. If you look back on the chart, this stock from earlier last year was as high as $14, and it came crashing down and working its way down there. If you notice that back then, August, in the middle of the pandemic, the earnings were that they were going to be losing 2 cents a share. That's what was reported. Then they're losing 12 cents a share, and they're losing $1.07 a share, and they're losing 18 cents a share. They're doing nothing but losing money, losing 24, 40 cents a share, right, all the way through. So that looks terrible, and that's what is typically associated with a penny stock. Here in 2019, everybody had high hopes, but yeah, all right. So the stock's only been around since February of 2019, and the company has never made any money. In fact, this here is a reverse split. Or no, maybe it's not a reverse split. It's a regular split. Yeah. No, it's a reverse split, 1 for 3. So a reverse split is a very bad thing in penny stock world, because that means that the company reduced the number of available shares out there just so they could make their stock price look better. In a regular split, every shareholder that has 1 share, the share gets split, and now you have 2 shares. Usually the price drops in half when it does that. In this case here, am I reading this right? No, okay, it's not a reverse split. It's a regular split. They went from 1 to 3, which is a good number. So you go from 541, and then the price drops to 330. See, that's not even 1/3. So usually TradingView, I might have to look this up on a different system just to make sure. Usually TradingView kind of goes backwards, and yeah, 3 for 1, 1 for 3. Now 1 for 3 means I'm getting all confused now all of a sudden. This is, I apologize. What we're going to just do is look at Tesla, and I'll explain to you. Tesla went through a split, before the pandemic, as did Apple. Oops. And so if we go back, you'll see what I mean. Okay, so here's the Tesla split. Right. Tesla split the right way. And see how the large numbers first, 5-1. That's okay. So the SBEV is a reverse split. The idea that it drops is even more catastrophic. Okay, so I just want to make sure, because that drop was throwing me off. I'll explain to you what's happening. All right, so in a regular split, like what happened with Tesla back in September of 2020, and right about the same time Apple did its most recent split. If you recall, Tesla was trading at something like $1,500 a share or whatever. It was this really high number. And then they did this 5-for-1 split to bring it down to about $300 a share at the time, or maybe it was from 2,500 to 500. I don't know. Anyway, it was up in the thousands, and then they brought it down. When they issue a 5-for-1 split, they'll give you 5 shares for every 1 share that you have. Okay. Or in a 2-for-1 split, which is the most common kind of thing, they'll give you 2 shares for every 1 share that you have. That's when that happens, typically the price of the stock will drop by whatever multiple. So if you have a $1,000 stock and they do a 2-for-1 split, it drops from 1,000 to 500. If you do a 5-for-1 split, it goes from 1,000 to 200, right? 10-to-1 split, 1,000 to 100. Now there's a thing called the reverse split where it goes the other way. If in fact, as happened on SBEV, Splash Beverage Group, it went from, we'll just give you 1 share for every 3 shares you have. And of course, when that happens, the price of the stock is supposed to go up to compensate, because then it would be an equal. In other words, I'm going to give you, if my stock is only $1 a share, this typically happens with very low price stocks. And if they drop below $5 a share, they get delisted. They get taken off the major exchanges. And if they got taken off the major exchanges, then it's harder for people to find out about the stock, and there are fewer buyers to come along and join in. So usually the company wants to avoid delisting, and so they'll do a reverse split. But what weirdly happens if it's a bad company is the price goes up, and then people just start selling. And it actually, if it's on the major exchanges and people find out about this company that it's doing nothing but losing money, then people just sell it away. So a reverse split is usually a very bad thing most of the time for people. In the case of Splash Bev, it was even worse than you would expect, because look at what happened to the price, right? So in other words, if this is a $1 stock and they do a reverse split of 1 for 10, say, then the stock would jump from $1 to $10. Now, $10 isn't very high, but it's above $5, which is the part where people, I mean, you don't get delisted just because you go below 5. If you go below 5 and you stay there for a while and you're losing money and you keep getting lower and lower, then you're at risk of being delisted. If you go below $1 a share, then it's just, wow, you got to bring this up above $1 really quick or you're delisted, right? That is, that's kind of how the New York Stock Exchange or the NASDAQ tend to operate. Well, this stock was in fear of being delisted, apparently. So trading around, at the time, $5 a share, which, usually you don't have to be too worried about being delisted. I don't know actually what their problem was, why they felt they needed to reverse split, but they did. They did this reverse split in June of this past year. And so if you're at $5 a share, that should take the price of the stock up to $15, right? Instead, it drops. Can you imagine I'm a shareholder. I'm holding 100 shares, and those stocks those shares are worth $5.72 or 5.72 a share, and so you're $572. That's how much you've got in value. And then they do a reverse split, and so now you only have 33 shares. And to add insult to injury, they're now only worth $3.20 a share. So you just went from a $500 value of your ownership to about $99, $100 worth of value of ownership. I mean, that's terrible, right? As a shareholder, you're going to hate this company. And rightfully, everybody just started selling it. It's been doing nothing but losing money, right? What do they do? Well, what they do is they make a drink called Tap Out. I mean, I don't know what else they ever did, but they make a drink now called Tap Out. And I think that they did, or they tried to sell it in like workout gyms. It's an energy drink, right? I mean, energy drink is kind of a crowded space, lots of people. So why all of a sudden did this thing go flying up? And why was it that had you bought here last week at $1, you're now possibly going to be making for $4 a share, 300 or 400 times your money, right? This is a typical penny stock situation. You got this downward trend of prices. You've got crud like reverse splits going on. This is not a stock you want to buy and hold for a long time. Typical penny stock is people think the company is going to fail or going to go bankrupt. Stock's going to be delisted, stock's going to be halted and quit and not trading anymore, et cetera, right? But if something changes, even a tiny little thing changes, that, hey, this company might make some money. This company might not go bankrupt. If anything like that occurs, okay, then the perception of value changes. And so this company had something change. What's interesting is it wasn't announced until this day. You look at here, the stock jumps, hangs around up here, so somebody knows something's up. The news did not hit the wires until Friday that Splash Beverage Group gets approval to sell Tap Out drink at select Walmart stores in Florida. So they have it's like 40 stores. They have the permission, authority, approval to sell their drink in 40 stores. Only 40 stores in all of Walmart? What that is, of course, a test market. Walmart's going to see whether or not they can actually sell their drink and whether or not it will sell. So this is actually a really big opportunity, and it explains to you what people think of this. In other words, this thing has jumped that much. It's done this kind of thing before, right? Went clear up to $1,400 or $14. They still haven't started making money. They just got the approval to sell their drink. They've got to deliver it. They've got to manufacture it. People got to like it. People got to start buying it enough that the company's making money. They got to manage all their costs. They're going to run around right now and say, hey, everybody, check us out. We got a test market at Walmart. I mean, okay, what you're thinking is they're going to try it in these few stores. And if it works, boom, it'll go worldwide. And then if it's sold there, it'll sell. I mean, there's a lot of ifs, ands, or buts in the middle of that whole situation, right? There's no guarantee. However, it's a good story. And in penny stock world, that's all you need is a really good story. So I got to tell you, this is a straight up brag. I found this stock on this day and was just doing one of the searches that I've showed you here before as my penny stock search. I'm gonna share it with you again. You go to finviz.com and you put in these characteristics for penny stocks. You're looking for the week up. You're looking for price under $5. You're looking for a million shares a day on average being traded. Sales, not profitability, right? But sales. People are selling more than they were before. Positive. And then that it's a US stock. Those are the things you're searching on. If you do that today, you get 42 stocks. And let's see, I'm going to go to the last of them. Oh, no, second to last, maybe. See if SBEV is on here. Yeah, it is. It's number 31 on this list, right? And you could do things like earnings per share this quarter. It's positive, right? And I wonder if that sorts out SBEV. Yeah, see, SBEV doesn't show up in that list. So that's why I don't typically do it. You can, that'll give you the companies that are better and stronger. But of course, SBEV is not that company. They just, all they got is wish and a prayer. Why did I like SBEV? Why did I think, oh, I actually like that one. Have a look at that. Why did I do? Well, because I go through these charts here, and I'll just get right to it because I don't want to run out of time before I tell you everything. See, a lot of these, they don't look all that good. There's an IPO and it's, dropping. And this one, that one's actually pretty good. This one is not good. It's just dropping down. And see, now this one's gone down and has started to come up. So again, I like that. But I really like SBEV. Take away the big red candle or big green candle right there. And just look at those two little candles. Here's why I really liked look at that chart and why I told people on Thursday, this is a good stock to trade. And when I said tell people, I mean, I was actually on a program called Money Morning Live and in the, no, it wasn't for them. I didn't manage to get there for their thing. It was for a different outfit called myconsistentprofits.com. I was doing a show for them, and I ran through this, and I saw this showed up on my chart, and so I explained some of what I was explaining now, except the part about the news. The news hadn't come out yet. This was on Thursday, and so on this day, the stock was trading around $1.90. And I liked it. I said, this is a good stock to trade as a penny stock because there's a gap up. See how 3 days previous, it had jumped up and it was, the gap happened and then there was a green candle and it closed higher and then it held. The gap did not, the price didn't come back down. Further, when it does that, it was going down before and it jumped up. So like it crossed the 10-period moving average. There's a study in the Journal of Technical Analysis that was published in 2013. I happened to be working as the managing director of the CMT Association at the time. So, I read that when it first came out. I said, wow, this information is golden. They did a study on gaps. They did it based on data from 2006 to 2011, which is a really good period of time because it includes an up market, a down market, and a rebound market, a low volatility, a high volatility, everything in that 5 years, all the different market types you could expect were crammed in there. And so what they did is they did a study to see what matters with gaps. Do gaps actually matter? Can they actually improve your trading? And the answer is yes, they do, and yes, they can. If you follow 3 particular characteristics. One, the gap up is, significant. There's white space, so to speak, between the previous day's price and the next day's price. 2, if it opens and then goes higher, closes higher. So it's a green candle or a white candle in the case of a monochrome coloring. And also, if it crosses the 10-period moving average. Now, the article did not specifically put those 3 together. They did a bunch of different characteristics, and then they showed the statistics of what happens from the entry, which is the next day after the gap, the entry and 20 days, 5 and 10 and 20 days later. And then they compared it against the S&P 500. And what they found was a stock that gaps up beats the S&P 500 something like 60% of the time. This is out of thousands and thousands of gap trades. And so that's enough to be better than random. And I realized, okay, that could actually be an edge if you trade that way. But then I dug into the data a little further, and I found out that if you do, if it goes up at all, that's one, that's a positive characteristic. If it goes up and closes higher, that's even better. And then if it crosses the 10 period moving average, that's even better still in terms of all, just individual. They didn't put them together to see how it combines, but I did. And I found over the years that it really matters. Not a lot. It's not 100%. It's not even 80, 70, 90, or 90, 80, or 70 percent. But it is probably about 65% of the time it will beat the S&P 500 over the next month. Well, if the S&P 500 goes down over the next month, that just means this thing doesn't go down as much, right? So there's still no guarantee that it is going to go higher. However, in penny stocks, I have found that when it goes higher, it goes significantly higher. It's significantly short period of time, just the next 20 days. So that's why I saw this on the chart and liked this particular stock. I did not know about the news, did not know about its backstory, did not know that it had gone through a reverse split, did not know that it was, hey, a crummy company, right? I don't care. I don't care if it's a crummy company. In penny stock world, all we need is just a little bit of luck. And meanwhile, I got a stop loss. So I actually got into the stock myself on this particular day. And then the very next day, I got super lucky. The news came out. They're going to test market their share. Now, here's the thing. This is a company that has been losing money since it started trading 2 years ago. But if they go into a test market with Walmart and Walmart says, this thing sells, and they decide to expand it to go into lots more Walmart stores, well, yeah, this company is going to start making money. They're going to make a lot of money. They're going to make at least enough money to call themselves profitable, right? If a stock is trading profitably, it's not a penny stock. It's not $5 or less. $5 or less is what happens when shareholders believe the stock is worthless, right? And besides all this thing went through a reverse split. And so it has reduced the number of shares that are available to trade out there. On this day, when it went screaming up on Friday, I did get this. I didn't get all the way up here. I'll confess. I was expecting to try to get $2, $2.50, somewhere in there. $2.50. I had put a 50-cent stop loss on, and then I was hoping just to capture another 50. Well, it went screaming up in the first few minutes of trading, and hit up here at around 287, 290 something, and it halted. It halted because it went up so fast and there were so few shares. And I said, okay, what's it going to do when it comes out of the halt? If it doesn't just keep going straight up, I don't want to be in it. I want to go ahead and get out. So I did. I got out at like 297. And then I went and told a bunch of people, hey, check out what I did. It's a good trade. That's on the morning live show. And I'm wondering if a bunch of those people jumped into it afterwards, because it ended up closing. It for most of the day, it was sort of hanging around there. But throughout the day, it went up and it closed up here. Right now, the quote is actually clear down here, 375. So the thing is, I think this thing, it's going to pull back. I think there'll be a lot of opportunities for it to pull back and for people to get in and get shares of it at lower prices. But as we said, they haven't even started their test market. We don't know how the test market's going to go. It might go lousy. This thing could just drop down. So this isn't a stock you just want to plow all your money in and buy and hold. But the reality is that if the test market carries out, if it does well, and if the test market expands to larger number of stores, Walmart or other stores, if they start selling and distributing their drink more broadly, then if they manage their expenses and if they get other investors to jump in, this stock is going to be like a $20 stock in no time, right? So I feel like if everything goes well, right? And here's the thing: see all this jumping from there to there. Somebody knew this stock was going to go from $1 a share to much higher. And so they plowed in over those 3 days to get themselves into position. And, now we know the news came out. So as it drops back, if in fact the test market goes well, then people will know and they will start jumping in. Hedge funds or whoever else is watching this stock. They're maybe it's a meme stock somewhere out there in some subreddit. It's being tracked by people. So it's the kind of thing where you could buy it and somewhere for the next month or so, we could see it go lots higher. Now it might be that it goes up and it does one of these things, drops down very fast. That is typical for these kinds of stocks. So I feel like if you see it start to drop, you need to set a stop loss and then keep it on your radar and pick it up again lower. Because if the news comes out that the test market is going well, that thing is going to start rocketing higher. And if in fact it actually goes well, it's going to keep going higher still. How high could it go? Well, easily it's been as high as $27. I mean, it never stayed there. What was the highest it ever closed at? Looks like the highest price ever closed at was 19. But as I said, $20, that's the target. If things go well for this company, they'll be to 20 in no time. And they will stay at 20 and maybe even keep going, depending on how well things go. But don't lose sight, right? Is it a guarantee? By no means, because it's the energy drink market. There's a bazillion drinks out there. What's another new one? What is it going to taste sweeter, better somehow? It just is going to have even more caffeine, and even more energy, taurine, or whatever else they want to throw in it. I mean, maybe. I don't know what its gimmick is. All I know is that it's still a long shot for them to have this massively successful thing. But it isn't too bad of a long shot. Even if it sells mildly well, if it's got pretty packaging and enough people buy it, then the company can make money and actually be profitable for the first time. If all they do is achieve profitability, this is a $10 stock. So I think there's a lot of opportunity here within the next month or two for the share price to go a lot higher. As you see, it could go a lot lower. So what you do is you buy it, you set a stop loss, and then you take your profit, which is what I did back here. When it went running up way past where I was trying to get to, I let it go, and said, okay, that's enough, and I tipped it. Now I'm going to watch and try and do it again. And that is what stock to trade. Hope that's useful to you. This is, by the way, I'm not a licensed financial advisor. I'm not giving you specific advice. Hurry out, run, buy this stock. This is educational, entertainment purposes only. If you haven't ever traded US stocks before, then you should learn by just paper trading this stock and try to practice what it is you're learning about, so that you could say, what was it like? What if I had actually traded? Would I have the plan, the mental agility to, it comes back and against me. Now what do? Do I stay? A lot of people say, like, I'm buying, I'm holding forever, HODL, Bitcoin, yeah, whatever, you're dead. No, right? You got to have a plan. I buy this thing. If it goes back a certain amount, with penny stocks, typically 25, 30%, most penny stocks actually go 50% as my stop loss. If I buy $1 stock and it drops to 50 cents, I'm out. And I only buy enough shares that if it does that, I don't lose any more than 1 or 2% of my account, right? So like I bought 500 shares of this. I didn't buy a bazillion shares, about 500 shares. And, if it had dropped 50 cents, I was only going to be out $250. As it was, it ran up and I made 500 or more. So great. Take the profit and run. And you can say, well, yeah, but Gordon, you could have made it. I know. I've been there, traded these kinds of things so many times over the years that I realized that's not my trade. There will be plenty of opportunity for me to get back in and do it again. So anyway, learn how to trade. And yes. Question from Stuart. Hey, Stuart, how's it going? Should check the congressional disclosures to see if any senators bought it. Sweet. All right. On that note, I'm going to tell you until we get back together again next week, take care and trade well.